All right, welcome back to the Countertop podcast. This is going to be a podcast where we bring topics to the table, kind of chat and divulge and conquer. Uh, I'll put all the fancy words in there that make no sense at all, but we'll go with it. We're on YouTube, Facebook, Instagram, Twitter, so on and so forth. So please give us a follow, as well as all the major podcasting websites, Apple Music, Spotify, so on and so forth. So today we're going to be doing something a little bit different. We've done this in the past, but kind of a deeper dive on a kind of current subject that is going on in the world right now. And if you haven't seen it, you probably don't listen or watch any news at all. But a big topic about the stock market and the current GME, which is Gamestop, and there's a few others like AMC, Nokia, BlackBerry, but really GME or GameStop is going to be the big one that kind of comes into play. So we'll be kind of taking a deeper dive on that one and kind of discussing what's going on, what's happening, and hopefully if you don't understand it, we can help break it down for you today and kind of our thoughts and questions and concerns on it as well. So I don't know if anyone wants to jump in right now, or I can just kind of go for it.
Well, I would generally say that we can't forget about Elon Musk in the conversation. Just Twitter overall, it goes over into celebrities, hedge fund managers, CNBC, more fake news, stock manipulation, free market trades being cut off. Something about free speech. Facebook's in there again, which somehow ties into Trump. Uh, and QAnon.
Well, let's
And
start
I'm
off.
pretty sure, yeah, no, isn't Portland still writing for some reason about
Yeah. Well, we can start off maybe explaining the situation. So, and Tanner, we've talked about this before, and you kind of given an in-depth, good point of view or good discussion on it of what happened. Looking back at the beginning of January, GameStop's stock was around $18 a share. And as of today, we're looking at roughly $325 a share. Um, so, Juice or Tanner, can you maybe jump in on that one and kind of explain what happened, the short selling, the um, kind of movement that came with it? But I think you can probably give a good scenario of what happened overall.
Sure. A lot of retail companies that you talked about during the pandemic had dipped. And since we know that they're vulnerable during this time, that brick and mortar buildings, all the basic services, shopping, are all being constrained around the country, which is causing the overall stock price of these to dip. Well, knowing that hedge funds who operate in large amounts of money decided they were going to short, as they did in 2008, a lot of businesses into the ground. And somebody originally started on YouTube, actually. The YouTube user was also a Redditor, but he was looking at the condition of short sales, and he said, "Hey, I don't know if this is something, but it has kind of the makings of what happened in 2008 with both, the housing crash, the bubble there, also, you know, stock like Volkswagen that's been shorted before." And essentially, what it is that these hedge funds agree to buy stock in the future at a cheaper and cheaper and cheaper and cheaper and cheaper price. As the stock continues to dip, they keep making more and more money until those companies go bankrupt. Uh, what the internet did was they said, hey, they have contracts that say they have to buy a lot of stock in the future. If that stock's not available, they have to pay more for it. We should get them. And then it kind of worked. And then more people were jumping on the bandwagon, and people kept posting their gains and saying, hey, um, you know, this is actually working. And then, as that was about 3 weeks ago, it really started to take off. About 2 weeks ago, you started to hear the national news talk about Reddit. Um, And about last week, it really kind of took off where there was a lot of outspoken Wall Street personalities and types who were saying essentially the retail investors, which are us, are too dumb to realize the risk and how you're supposed to use the stock market, and this isn't it. And so, you know, trading was restricted to a lot of people. There's allegations of, market manipulation on both sides. And overall, we have a societal movement that says, who's now renting billboards across the country saying, hold GameStop, stick it to Wall Street. And Wall Street, which is odd for them to be calling for reform. I think that sets up our conversation pretty well.
That's perfect. Yeah, no. So maybe let's dive into some of this. So, as you kind of spoke on, we'll maybe dive in a little more. So basically, the hedge funds are betting, I guess, against these companies that their stock at the end of the contract won't be worth anything. So GameStop is one of those ones that, most likely was probably going to be going bankrupt, here in the near future, just because one, brick and mortar, but two, it is still GameStop. And most everything is now digital format from a video games and those type of things. Really, besides consoles, and you're ordering those online anyways. You're seeing them kind of being cut out, and so then you put the pandemic on top of that.
5, they don't even have an optics drive anymore on one of their options.
Yeah. And so I think that, cuts them out. And really, I think the only thing that probably kept them in was the Xbox and the PS5 that came out recently, that they kind of maybe had a little bump, but, heading towards bankruptcies. So these hedge funds bet against it. And if their bet doesn't work, this is exactly what happens. And so what's been really interesting from my standpoint, I think there's just this movement towards... because like from my standpoint, I've invested in GME, but there's not really a ill intent from my side of things, which I think in the classic news format right now, you're getting these ill intent. They're combining together and bringing down companies, and really until Robinhood recently shut down the restrictions of, and a few others like Ameritrade as well. TD Ameritrade did as well, restricted buying, but you could sell your positions within those shares. I think that's what really kind of was the flip of a switch. That this is bigger than just the investment or the potential for gains. It was more about the right for the retail investors to be able to do whatever they want with their money, and this is where I think it's exploded in the last probably 4 or 5 days of just now we're going to stick it to the man. You thought it was bad before, now it is. You've taken a stance, or we're taking one as well. And the internet, one with the pandemic and everything else, I think this is a coming together, which is also kind of, it's nice to see with everything else going on in the world. Everyone getting behind here. These hedge funds aren't cutting us a cut or anything like that. So it's helping your everyday man or woman try to make something. And there's been tons of money made. There's been a ton of money lost from the other side. But I think at the end of the day, it's a movement in the right direction. And it is scary to see, Robinhood put a halt on things, because there's going to be the class action lawsuits that come with that. But at the same time, there's no real penalty at the end of the day. Robinhood will most likely go bankrupt or close down because of this. So it's a whole big thing. But I think the biggest thing for me was it was never about sticking it to the man until it was restricted, and then it became, this movement. Let's all stick together, and that's what it's been.
Yeah, I've seen a lot of comparisons comparing it to a modern day Occupy Wall Street, which I think is interesting because it's almost a virtual Occupy Wall Street, if you want to call it that.
Wait, wasn't the first Occupy Wall Street not that long ago? What do you mean? Are we already like?
Yes,
right
it was
to
not
it?
that long ago, but that's the comparisons that I've seen.
Well, and this time they're actually, they're doing something, right?
Yeah,
that's affecting the hedge fund than
Instead of being-
protesting.
yeah, instead of being physically on Wall Street, they're actually putting their money where their mouth is.
Yeah.
Right.
Uh,
Do you guys think that could have been possible before, or is it only because you have the clearinghouses operate and open up to apps that thought they could, they thought it would work in the opposite way, right?
Yeah, I think it's just information and apps being made more available to people and at a lower cost. Because Robinhood, as much flack as they're getting now, are really the ones that opened up zero fee trading and forced all of these other brokerage houses to adopt that model of not charging customers per trade and not having required minimums for account dollars and things like that. I think it's just more accessible to people. So there's people might have had a collective opportunity to put their money together and do this before, but they didn't think about it like that. Now you don't have to have a large collection of people's money in one account. Everyone can just do it on their own from their device that they've got on them every day.
yeah, I think the app played a huge part in people investing. I think it brought the availability to be part of that. And of course, no one saw this coming, but I think before the chaos happened, it was the ranked number one app in the App Store, and those type of things that they were doing a good job. And like you said, Ray, it's they gave the availability for $0, no fees and no minimums and partial shares, all of that you couldn't be a part of, 6 months, 6 to a year, maybe a year ago. So I think this definitely, it was an opportune time. And then social media, I think it's always been there, but it kind of was used to further the narrative of this is what's going on, and then also what's wrong. And then when the Robinhood put a halt on things, it just blew up from there.
How awesome are the memes?
Oh, that's
They've been great so far.
That's all I do all day long is have that one screen open, just refresh, check out the new memes. And that's another funny thing is looking at these news, NBC, ABC, CNN, all of those that are trying to report on this, and you have them talking about this Wall Street bets, that it was a group of people that decided to do this. They're so far from what it was. Really, it was this guy that had an idea and he sent it out and everyone picked up on it. It wasn't like this was a planned attack. Yeah, exactly. But that's how it's coming across as Wall Street Bets is a group that they do this on purpose, and all of that. But there's really intelligent people within that group that talk about legitimate stocks and companies, and that's where I think it's comical from that standpoint, because they're so far detached, but yet they're just bashing on these people that they have no idea who they are.
I think that's pretty typical of media these days. I mean, I know we had talked privately before about this being related to other issues recently, especially with apps like Parler and all the stuff that's gone on with them. And now that it's affecting such a different range of people, aside from what that would have affected, and fundamentally is very close to being a very similar, whatever you want to call it, situation. It's interesting to see the response flipped 180 degrees from where it would have been, 30 days ago, if that.
Hey, and how great was that? What are we, I don't know, 2 weeks, second week since Biden's been in office? Is it something like that?
Yeah, close to that.
Ted Cruz, AOC, Donald Trump Jr., Ben Shapiro, Mark Cuban, I don't know, Tiger Woods. I don't know, and let's go with who's the Bowling Green for Columbine guy. I don't know. You just say anybody from the range of the political views all got on Twitter and said, "Hey, man, that's really screwed up. What just happened?" It's crazy that this made people agree, and it was. But I think it's what's missed is that the V for Vendetta type of camaraderie and or culture group, whatever you want to say, of this movement isn't going to affect Wall Street one bit, because Wall Street gets paid on the ups and the downs. They like volatility.
Yeah.
And so whatever the vendetta that we might have, there is some truth to, um, we could use the word platforms like Robinhood, in both sides. One, they have a duty to not do harm to themselves as an entity, right? They have the right to not go bury themselves into the ground if what is happening in their company is hurting them, right? No one would disagree with that. And two is there an ethical responsibility for a company to protect its users if there is probable cause for harm, right? And you can't say that people throwing money and continuing to buy a stock based on a meme couldn't be interpreted objectively as potentially harmful behavior,
I
right?
think
If
it's definitely there's volatility there that could expose someone to uh, damage their financial well-being because of this.
right, and it's like you're saying, it does get into a really awesome conversation we're having about, is social media application platforms go down to businesses responsible for more than just providing a service. This is like the ethical community ramifications of their actions. Like, it's kind of goes beyond the SEC violation
Yeah.
potential, right? There's that, like, that's everyone's on that class action lawsuit at this point, but it kind of goes a little bit further.
Yeah, I mean, I know that potential is there. I just still am of the ideology that we should not be. If someone is going to make that decision, they're making it for themselves. Just because someone's making a stupid decision for themselves doesn't mean we should regulate based on the handful of people that don't do enough research on this to understand the volatility.
And I think they could also add in there, though, that there's certain restrictions with that, that choice, right? Some margins, and if people listening aren't aware, but it's basically a loan from, say, Robinhood for you to be able to invest into stocks. Like, that's where I can see them coming into play, going, hey, if because it's easy to get a margin once you sign up for it here, we're not allowing you to use that in that certain area. Like, that's where I feel like that type of a restriction would be, like, it's because it's their loan, they're not going to support it. Like,
it's Robinhood money. Robinhood's money in that situation. So
yeah, so
that's
that
understandable. You've got people gambling with their loan, their money. It's
Yep.
understandable to restrict that. But if I have $8,000 in my Robinhood account and I want to dump it all in GME, knowing the consequences or not knowing the consequences, either way, if I make that decision, that's on me.
Yeah, and I think it's a big enough issue. If Robinhood feels like it should, why is the SEC not halting all trades and sales of that?
That's where you get the interesting perspective of Robinhood is owned in part by a clearinghouse.
Yep.
I think that's what people's biggest issue is. It's not necessarily the steps that Robinhood took. It's because they're feigning the
Mhm.
opinion that they're protecting the users from this loss, but
Mhm.
really there's a lot of speculation that they're protecting their biggest investor from major losses.
Right, and that's where you have to do that balance, as I said, between that fiduciary duty to do right by the company and the ethical responsibility to your customers. It's interesting. That's how you can't say I fault Robinhood for covering its ass, whether it's its parent company or if they were really in a bad shape. I can't fault them for it. I don't like it. I won't be using their services. I'm
Yeah.
pulling all of my stuff out, but I think they have a right to, conduct themselves. Again, it's uh, yes, it affected me negatively, them manipulating the market by restricting it. I don't think they should be able to, but it's based on market manipulation, not on their terms of service or service
Yeah.
offerings.
Yeah. So I have an opinion that I've brought up before. I don't think there should necessarily be restrictions against Robinhood that stem from this. or Wall Street in general, because I think if we let the free market work the way it's supposed to, people, like you said, are just going to stop utilizing Robinhood services. And if enough people do it, they're going to go out of business that way. There's no need for regulation against Robinhood that prevents them from doing this in the future. And then a group of investors tanks Robinhood through excessive buying of stock in a company that's being heavily shorted. So that's what I think, and I think that's probably a good indicator of what might happen to Robinhood coming up, unless people really value the ease of use through the app over the stuff that Robinhood's done. That's a personal choice for everyone too, whether they want to keep using it or not.
Does this put you guys in the boat of not having all of your eggs in one basket, per se, when investing into stock, because of something like this in the future?
Maybe I would be of that opinion now, but prior to this, I wouldn't have imagined having to go through multiple brokerages, because that almost seems like volatility in itself, having money spread out like that instead of being confident in a brokerage that you have an investment account with.
Yeah, and it's weird too, because you have multiple accounts that are managed, right? If you have different employers, like some use Merrill Lynch, some use Fidelity, some use whatever, I don't care, but they're managed by a group, and you don't have any real say in the performance of that portfolio. But now that we're managing it on a smaller scale, even if it's just with smaller money, the only reason we can do it is because somebody is boxing it up with a whole bunch of other stocks, right? Absent of these clearinghouses even providing this service, you wouldn't be able to do it. Yeah. You know what I mean?
Yeah.
So it's like, you could get mad at them for it, but I'm also not buying whole shares potentially.
Yeah.
Maybe, it's like they're bundling and managing all of that, and that's a service. I don't think people could.
You could bring up, I think these days, in a roundabout way, because of Robinhood and other places offering fractional shares now, I think theoretically you could put together a portfolio yourself with only certain dollars in companies that does not equate to a full stock, which is like a service that they would have offered, only you're doing it yourself now. I just think there's tons of articles out there talking about how a private investor is never going to beat the market. And so is it really smart to do that yourself when you can just use these funds or other,
services to do it for you?
Yeah, not necessarily services, but like different Vanguard options and stocks and bonds and stuff that you can buy would be a similar bet, because they pay dividend and they grow over time. Instead of trying to play the market yourself and make big gains, you are just playing the long game, I guess.
Yeah. And I think it's partly of how people look at the stock market. At the end of the day, it's a casino. It's a free, open market casino with risk, and you go into it either, I'm going to go play the penny slots and, over time make $5, 5 years from now, or I'm going to go play, blackjack, and I'm going to put all of it on. Like, it's the same concept with companies and all of that at the end of the day. And so that's where, these articles that come out and say, you may not know what to do with it. True, but also someone else higher than me may not either, that has a full-time business doing this. It's, your reputation and your, I guess, your track record is really what proves as a, success or not. But I just think that's where this has to be kind of looked at in that way. At the end of the day, there's no guarantees within it, so you should be able to make those decisions if you feel comfortable with it. I think is the biggest thing. So, you cut out. What was that, Tanner?
I said I don't think people would debate that much. Just, people should have the right to use their money as they see fit. And I think you just temper that with applications can be douchebags, so you might not want to put all your money in one application. Even if it's not actual money, if you're talking about social media, if you're talking about your Instacart services or something like that. Um, you know, don't.
Yeah.
I think that's about it.
Yeah, I think it also sheds light once again, like everything we talk about, where it's important for people to do their own homework before they utilize any kind of service or put money anywhere or put time, effort, anything in any one area. If you don't think it's going to pay off for you through the homework that you did, then don't do it.
Yeah, no, that's 100%. So maybe we'll transition just because this has been a lot of what's happening now. What do you guys think of what's going to happen in the future with all of this?
I think they're going to have to look hard about algorithms that further use your metadata that's collected on you to factor in social trends. And I think that that's going to create more volatility and easier manipulation of the market overall.
Yeah, I agree, especially the manipulation part, because if they have algorithms to detect something is going to happen before it realistically even happens, then that kind of gives them an inside edge to
Minority
correct
Report?
that market in one way or another that they see fit.
Yeah,
But
it
that's
was.
also a betting game.
But I mean, so like for me, you know, if you just get on Twitter and wait for Elon to say a word,
Yeah.
you can make money. You get there first. You wait for the hype train to get just about as high as you think. You watch those trending number of tweets per hour shrink, shrink, shrink. Sell the stock. Watch it dip. I mean, you could do it. And even if you wanted to create a hype train using social media, you could create a hashtag and blow it up, steal it over, switch it over, whatever you want to do. And I think that that's going to be instead of where yesterday's traders were talking about oh well, what I do is I sell about 2 million over here, and that creates this look that it's going to go up here, and then I'm going to sell here, and then I'm going to call Joe over here, and Joe's going to tell Susan, and then Susan's going to write a report, and then I could expect 4 hours later that there's going to be this uptick once the journal comes out. Okay, that's how it used to work. I think now we've shown all of our cards, where we put it, how we generally communicate as millennials, and it will be bastardized, flipped around, and used against us so that we get less volatile markets overall.
Yeah, that's a fun game, and I don't disagree. And then if we want to get into GME specifically in the short game, I think there's only two ways it can go. Either people hit a threshold where they're no longer comfortable with volatility, and or some big players hit that point and then sell their stock and pull out of their holdings, and then it's going to scare a lot of people off as soon as they see it dip. Otherwise, people are really going to hold on till the bitter end, and these hedge funds are going to have to buy those options back at the inflated price. So we'll see people cash out at that point, make all their money. You'll see a couple hedge funds go bankrupt, and then the market will self correct, and we might be in a bit of a dip for a little bit, missing those hedge funds, but it's just going to go back. It always does.
Did you see the overall long option plays get sold off? So a lot of stock values are dipping because hedge funds having to maneuver to cover their asses on the GME, which could create a lot of, if you're done with the volatility, and smart traders, retail investors like us, if we go, hey, I'm done with the volatility. We dipped on the normal consistent stocks that have a 5-year history of upwards trends of 10% or so. They're at a 7% dip because of this. Buy into those more stable. Those inflate gradually over time. People get a more hedged position, and it calms down.
Yeah. It'll be interesting to see what kind of happens with the SEC, and how they handle the situation. I think this one's going to be a bitter, thorn in the public side for a while. I just don't see this going away. I think this movement that's been caused by Reddit and this one person. I think everyone's going to be watching that because, of course, everyone wants to make the quick buck. So it'll be interesting to see what kind of happens and then what fallout happens from the SEC changing the rules to most likely benefit your big hedge funds. So it'll be interesting to see, how, I guess, what possible movement comes from that.
Yeah, and barring any SEC involvement or a recession thanks to artificially inflated stock prices, which I don't necessarily see happening, but it could. But is there a scenario that plays out where hedge funds and other companies and individuals stop shorting stocks? Like, will we just see a downfall in that trend and they try to make their money elsewhere? Or is this going to be something that sticks around even though people have kind of found out about that exploitation of being able to get together and buy up shorted stock to then make a fortune that way?
I think it's going to depend on where the SEC falls. If they don't do anything about it, I think you are going to have hedge funds moving away from it and trying to find other solutions to make their money. Just because it's not sustainable if it does happen to them. Because the only thing I can see with if everyone sells out of GME, the next post on Reddit's going to be what's next. So I'd be shocked if hedge funds right now were not moving their stocks to get out of those calls ahead of time.
Yeah, but if the play is always gather this community of now 5 point something million and focus on buying up the shorts in one stock, I mean that leaves the entire other market to continue making money.
Yeah, it's too narrow for that scenario to really have any way to play out. But I don't see it happening. I don't see it scaring hedge funds and other companies away from shorting stock. It just would be interesting if they take a big enough loss here. Maybe they do dial back on it a little bit until they kind of recover some of that loss. But who knows? This is all speculation anyway.
Yeah,
we don't know what's going to happen.
Well, any other thoughts or anything that we want to wrap up on this topic? I know there's a lot here, but it's one of those things we could probably go on for hours and hours, but I just want to get something, just because it's relevant, we felt like we needed to post something.
Yeah, I would say don't underestimate the social media aspect of it. I think we've seen that, kind of take off this past year. But I'm going to be real interested to see real short-term trading and creating, tickers on let's say large investors, like Elon, throwing, let me throw $1 million in Dogecoin, sitting at dinner with his friends and goes, watch this shit, and he says hashtag Dogecoin and he tweets it, and then he just makes $50 billion sitting at lunch going, hey, this is paid for, and then he walks out, and then it goes back down again. You could see that very much as being overall a societal down, right?
Yeah.
That might be a negative if you get people who are just riding socially, like hit little highs here, and then you do get the people who are trailing at the end, and you're going to see. I don't think that's good long term.
It's crazy that one person has the ability to manipulate a market like that, even unintentionally. I don't think Elon Musk tweets these things out and expects stock to behave like it does, but it's a unintended side effect of being so prevalent in public eye, I feel like.
Yeah.
So that's an interesting aspect of it, for sure.
Did you guys know that more than half of Tesla's revenue for 2020 came from subsidies? From when I say that, basically, if car companies don't produce enough, carbon neutral or carbon negative effects, they have to buy it, kind of like the Gore bucks. And that's their primary source of income right now.
Yep.
Interesting.
Their sales are still down.
Yeah.
So
anyway.
Well, any other final thoughts?
No, not about GME in this situation. There's plenty of other places we could go.
Yeah.
Especially
the Robinhood situation, but I think we're good as far as this topic goes.
Okay.
Specifically.
Well, final thought, make sure you do your research. Don't just jump into something because it's a trend. I think that's the biggest thing. Make sure you understand what's going on.
No, I said do something because it's a trend. Just treat it like a trend.
Hey, I want the shares for me.
If you're gonna jump into a trend, make sure you have diamond hands.
Yeah.
There you
Well,
go.
no, you gotta have real paper hands in a trend.
Yeah, that's
Just grab it, jump it, leave it.
Yeah.
All right, well, we appreciate you guys stopping by. Once again, this is Countertop Podcast. We'll be throwing videos up once a week, and like I said, talking about topics random all over the place. This one was about GME. Hopefully we'll have an update here the next week. We'll see where it goes, but once again, we appreciate it. Follow us on YouTube, Facebook, Twitter, Instagram, so on and so forth. We appreciate it. Thanks. See ya.